Both Swiggy and Zomato will now be listed on the stock market from 13th of November. In this video, we will go through a full comparison to help you decide where should you invest your money. I'll cover everything from their business model, market share, valuation, financials for both the food delivery and for the quick commerce segment, then top management data, operation strategy and use of funds, and lastly, I'll also share where I have invested and why. दोनों में the business model is quite similar. One major difference is that Swiggy operates as a super app. मतलब एक ही app में you have your food delivery, Instamart and Swiggy Genie. The biggest advantage of this is lower marketing cost and hence lower cost of customer acquisition. Versus Zomato on the other hand runs as a specialized app with separate apps for food delivery, that is Zomato, and for quick commerce, that is Blinkit. I personally think that separate apps is a much better option as it can focus on niche or segment specific objectives when it comes to marketing. Second, market share. So Zomato is much more popular in the northern part of India while Swiggy is more popular in the southern part of India. But now even Zomato has started to expand aggressively in the south, because of which I think Zomato in food delivery has a market share of 58% versus Swiggy at 34%, which by the way has decreased from 38% before. Now this can be because of better marketing and customer acquisition by Zomato. Also, one major point is that Zomato has always focused more on tier 2 and tier 3 cities as well, while Swiggy, which pehle only used to target metro cities, has just recently started to focus more on tier 2 and tier 3 cities. This can be a major reason behind Zomato's increased market share. Then market share mein Zomato's Blinkit is at around 40 to 45% of market share, while Swiggy Instamart is at around 25 to 27% as of August 2024. Isme bhi Instamart ka market share has dropped from 30% before to 27% in 9 months. Now let's compare the financials. In FY24, Swiggy's revenue went up by 36% to 11,200 crore. Losses went down by 44% to 2,350 crores. Now, the progress is definitely good, but it is still far from profitability. Zomato, on the other hand, has turned profitable now with an EBITDA of 42 crores, up 1,200 crores year on year. Its revenue went up by 71% year on year to 12,000 crore. Then even in cash reserves, there's a major difference, with Zomato having 12,000 crore versus Swiggy at 5,400 crore by FY24. Now let's cover the two main segments. First, food delivery. So MTUs or monthly transacting users are 20.3 million for Zomato versus 14 million for Swiggy. Then average order value is quite similar for both, 425 rupees per order for Zomato and 436 rupees per order for Swiggy. But the main difference is in the gross order value, which for Zomato is way more at 32,000 crore versus Swiggy at 24,000 crore. Mainly because the number of orders are much more in Zomato as compared to Swiggy. Then contribution margins, maybe Zomato is way ahead at 6.90% versus 5.72% for Swiggy. Now the most important part, that is quick commerce. Honestly, if you really want to compare the two companies, then the main comparison has to be in their quick commerce segment, that is Blinkit versus Instamart. Did you know that both founders of Zomato and Swiggy have recently said that quick commerce will be a lot bigger than their food delivery segment? In fact, Zomato made the food delivery revenue growth rate is around 21% year on year, which is massive, but Blinkit ka growth rate in revenue is 129% in just 1 year. Matlab jahan pehle Blinkit's revenue was a small part for Zomato for total revenue, now Blinkit is 50% of food delivery and growing at a massive rate every quarter. So let's do a quick comparison in numbers. One interesting fact is that both companies, Zomato's Blinkit and Swiggy's Instamart, had similar number of active dark stores by FY24, 526 versus 523. But margins for Blinkit are much better at 2.13% versus negative 6.01% for Instamart. These margins help Zomato bet a lot more on Blinkit by expanding their dark store network. So in Q1 of this year, they increased their active dark stores to 639 with a promise of reaching 2,000 dark stores in the next 18 months, versus Instamart is at around 557 dark stores. Then contribution margins have improved at 4% in Q1 and 3.8% in Q2 for Blinkit versus Instamart, which also saw improvement in margins to negative 3.18%. The main difference, except profitability, is that Blinkit mein the average order value or AOV is much more than Instamart, maybe because they have more higher ticket size products like iPhones and PS5, etc. etc. If Swiggy works on the same or increasing their AOV by including more of such higher ticket size products, then it can definitely help with their profitability as well. So make sure to keep a lookout for these things as they happen. Then for Blinkit in Q1 of this financial year, adjusted EBITDA loss was just at negative 3%, which which increased to 8% in Q2. But I don't think it's a huge concern. I think by the next 2 quarters, Blinkit will become adjusted EBITDA positive, which can again cause Zomato's stock price to jump. Another extremely important point for comparison is that Swiggy has been facing a lot of changes in top management. Last year, head of Instamart left Swiggy, its CTO left, and now its vice president and head of supply chains management, Karan Arora, has also left just a few months back. Versus Zomato, which has good stability in their management, which honestly I think is extremely underrated and important when it comes to aggressive growth and expansion. Then fifth comparison point is around operations and use of funds. Now Swiggy has just done an IPO of 11,300 crores, जिसमें से 6,800 crore का fresh issue है. This money will be used in marketing, branding, improving their cloud infrastructure, for more acquisitions, and for expanding Instamart through more dark stores. Also, Zomato is now raising 8,500 crores via QIB, which will mainly be used to expand their quick commerce segment, that is Blinkit. Their aim is to aggressively expand this. Also, Zomato focuses a lot more on acquisitions, which has helped them grow faster and include new services. A recent example is that they've acquired Paytm ticketing business in August. Lastly, where have I invested and where will I invest now? See, both Zomato and Swiggy are in a duopoly now with strong purchasing power. So both companies will definitely make good money. Zomato is clearly going to be a lot better, seems a lot better, I would say, when it comes to expansion, marketing, market share, acquisitions, and most importantly, profitability. But will Swiggy turn profitable as well? And the answer is yes, obviously, especially because now they have a very clear path to profitability. Plus, after an IPO, companies have a lot of pressure to turn profitable as well. So the main question is not if Swiggy will turn profitable, but it is when will it turn profitable. See, personally, I have been invested in Zomato since a few months before it turned profitable last year, and I will continue to hold it for long term. And about Swiggy, I will wait for two things before investing. First, some correction in case we see any recent price jump because of the IPO time, etc. And second, most importantly, is when it will start to turn around, when it will be at the brink of turning profitable, similar to how I did with Zomato last year. This was the end of the video, and it's just my personal view. Please make sure to do your own research before you invest your money. Thank you so much for watching till the end. I really hope you found this helpful. All the best.